This is a Momentum Media production.
The SMSF Advisor Show. Your expert insights into the biggest themes shaping the SMSF advice industry.
Hi everyone, and welcome to the SMSF Advisor Show. I'm Miranda Brownlee, and I'm joined by Aaron Dunn, my co-host. Hi Aaron.
Hi Miranda, how are you?
I'm good. Only a few more weeks left of the year.
Oh, everyone I speak to at the moment is just absolutely flat out. So there is so much going on, I guess, work-wise, but also, of course, the government seems to be in full swing with legislative changes, obviously post-budget. And again, we are seeing, I guess, the final days of sitting as well. So if I maybe revert to you and ask what has been making news.
Since you mentioned the Parliament sittings, we did see this week the reduction in downsizer age reduced down to 55. So that bill finally got passed. So that gives everyone a bit more certainty. So that will commence from 1 January.
Yeah, so one of the conditions, of course, was with that reduction of age. So we first saw 65 to 60. Now this reduces it further to age 55. The condition, of course, in that was that it needed to receive royal assent. Now, past both houses at the time of recording at the moment, it hasn't yet received royal assent. But once it had, the regulations would change to allow for that to apply from the first day of the first quarter after royal assent has been received. So in essence, we are going to see those laws take effect, as you mentioned, from the 1st of January 2023.
Yes. So we've had some other big news this week on the director ID front. So there's been essentially a 2-week extension for those directors who hadn't yet lodged their director ID application. So the ATO, or the Australian Business Registry Services, has said that they're not going to apply any compliance resources where the director hadn't applied up until the 14th. So it's only for the 2 weeks, but they have announced some compliance relief around that.
Yeah, so there's still a large number of people that are required to that haven't yet applied for that director ID. Of course, our last SMSF Advisor Show, I think it was really hot off the press that we saw that legislative instrument come in that granted relief for those resigned directors to not be required to obtain that director ID. So I've heard of instances where, just literally people trying to call up can't even get a hold of the ABRS because of, the sheer volume of people getting this done at the last minute. So I think this compliance resources relief, so as in they're not going to impose any penalties if it's done over these next 2 weeks, is an acknowledgement by the registrar to say, yes, we kind of probably only got everyone moving a lot later than what was maybe intended. So therefore, given that everyone's trying to get this done, and we acknowledge that there are people that can't get it done through electronic means by them calling and in essence not being able to get through or waiting many hours to try and get through, is frustrating quite clearly. And therefore we need to provide some relief to support those people to be able to naturally get it within that prescribed time frame. So to me, it's the frustration of, this has all happened too late, in particular from a government perspective. To the communication, we only saw start to come out in the last 5 weeks. This should have been done a hell of a lot earlier, and really they're kind of reaping what they sowed in many instances here because of the fact that, this comm strategy should have happened much earlier than where we are today.
I think there's been a bit of frustration around the whole paper forms thing. They've said it wasn't available only for overseas applicants, and then they've started mailing them out the last month. So it might have been possibly to sort of allow people wanting to use that method to have more time to verify documents and that kind of thing as well, perhaps.
Yeah, it's probably a really good example of how not to do things to roll out, so you'd arguably say. But, I guess we are a fair way through it now, so sort of stick it out. And, like I said, hopefully it's done and dusted, and we're not looking at that transitional period. It's quite clear, of course, any new directors must comply with the new requirements that have been in place since the 5th of April 2022.
Some of the other big news this week was from ASIC. So we've seen ASIC take compliance action against a handful of auditors. A couple of those were to do with those auditor independence breaches. And there was also some issues around evidence and not obtaining sufficient valuations and things like that. So, yeah, ASIC certainly still probing that whole SMSF auditor space.
Yeah, and much of this obviously relates to the fact that the ATO as regulator is actively not only looking at trustees, what they're doing, but also auditors, and where they see through their the auditor programs, evidence of those independence rules being breached, as you touched on, or the audit files that are being produced insufficient as such, then naturally we see ASIC get involved by a referral through the fact that auditors are registered with ASIC. So this is quite a common theme that we see through that process, but it is all about integrity of the sector. So, these are timely reminders of those that work within the industry to ensure that we actually have very robust standards in place, because of the responsibility that obviously comes with individuals managing their superannuation savings, or self-managing, I should even say.
Yeah. There's also been a bit of discussion with the economy not perhaps doing so well, and super fund returns in terms of the APRA regulated funds being hit slightly, although it probably is across all kinds of super funds. With those returns kind of being impacted, there's been some discussion about whether that will trigger a sort of a new surge of trustees setting up funds for the first time, thinking they might be able to manage it better themselves.
Yeah, so this historically has been a theme that we do see. So, the view is that, if my super fund's going to lose money, maybe there is a better way of looking at it, and self-managed funds obviously get a look in at that point in time. So it does come back to appropriateness. We know the ATO spends a lot of time with their literature helping to understand. Money Smart does those things as well. And our guest speaker today, Matt Crofts from Australian Crypto Tax Calculator, would be just one example of where people go, oh, well, maybe I look at doing this and investing in a different way because I can, and I can do it through a self-managed super fund. But equally, I think on the flip side, we've got concerns, and I know the Assistant Commissioner, Justin McHale, at a conference over the past few months, in his speech that's been published on the ATO site now, there are risks that come within new entrants into the system, and subject to the way in which trustees look to invest. And if they go bad, for example, there is a sense of the fact that there is a large number of funds in their first years that don't actually get lodged and never get lodged. And so the question of fact is, well, has that money been taken out, or has that money been lost, and lost to an extent that there may be nothing left? And therefore, they're kind of trying to absolve themselves of that situation. So I think to your initial thing and the article that you wrote, yes, we could see a surge, but also I'm sure as a regulator, the ATO will be very much and very close to the fact that they're looking at what an increase of activity might actually do, and therefore making sure that the right protections are in place to ensure that people are doing it for the right reasons.
And the other thing we've seen is the ATO update their market valuation guidelines, which is potentially going to raise some concerns around holding investments without a ready market.
Yes, this was quite interesting. This was only updated in the past few weeks. And one of the things that they've highlighted here is that when making decisions on behalf of the fund, there are naturally duties and responsibilities of looking after the benefits for members' retirements. And what they've commented on is it is unlikely that an asset with no known value or potential for capital or income growth would be considered a prudent investment to support members' retirement goals. So this kind of goes all the way into sole purpose test issues. And it's just something that has been flagged. And I'm sure I know some auditors in the industry have highlighted this themselves. And it does potentially flag some problems, as I said, from a sole purpose test issue about whether that investment is appropriate or not for retirement purposes.
Yeah, it'll be interesting to see if that does sort of impact what investment decisions people are making. All right. So as you mentioned, we will shortly be speaking to Matt Crofts, Product Manager at Crypto Tax Calculator, who is going to take us through some of the emerging issues for SMSFs and cryptocurrency at the moment, particularly in terms of tax and compliance concerns and everything along those lines. So we'll speak to Matt now. Hi, Matt. Thanks for joining us.
Hi, Miranda. Thanks for having us.
So Matt's a qualified CPA and SMSF Association accredited specialist with over 20 years of tax and SMSF experience, but at the moment he's obviously working in software development with a focus on tax compliance around blockchains. So he's really got that experience on both the SMSF and the crypto side of things. So we're very fortunate to have you here today. Just to start off, one of the common sort of things that tends to crop up with SMSFs is around proof of ownership of crypto assets and some of the confusion around that. Do you have any tips for both SMSF professionals and their clients in navigating some of those ownership issues?
Yeah, it is a common question, especially around the audit side. Probably, those that don't understand crypto too much, there's sort of really two parts that people sort of mix as one. There's the blockchain itself, which if you're interacting directly with, that's normally what people call a hot or cold wallet. So a hot wallet's really just a browser extension, MetaMask being the most common. And then cold wallets are like USB drives. Now, they can interact directly with the blockchain and store and basically do anything through what's called decentralized finance. Now, those are just long strings of addresses. They're pseudo-anonymous. You can't really register them to anything. But what you can do is try to tie ownership back, especially if it's a USB drive that you're purchasing. You want to be purchasing that with SMSF funds. So make a purchase of that, what's called a cold wallet, a ledger, or various names. So you can at least tie back that ownership. But the other one is, I guess, off-chain, or what they call on exchange. And a lot of people would know the word FTX, I think, is in our vocabulary now.
Yes.
Sam Bankman-Fried is on everyone's news feeds, and I guess that's what you call on the exchange. So those generally have KYC if they're in, know your client requirements, if they're in Australia. In the US and many other jurisdictions, KYC, is pretty common. But there are still exchanges that don't do KYC. So there's still a few rogue exchanges out there that are fairly niche, and you would probably look at something like a declaration of trust or a acknowledgement of trust in those situations to tie those to the SMSF just to meet the various conditions of, the regulations.
So, Matt, does it kind of lead itself to say that SMSFs investing in cryptocurrencies would be better in tune working with Australian providers because of the additional requirements arguably would be known here around that ownership that Miranda was, I guess, referencing in the first question to you?
Yeah, I think, certainly being closer to the regulations and, there's ASIC licensing, not that really solved all the FTX drama. They did have a license under FTX Australia. But, yeah, you just want to do your due diligence. There is a lot to learn in crypto, and it takes really a lot of effort and a lot of research to figure out who's trustworthy and who's not. There are Australian exchanges, I'm not going to mention names, but there are Australian exchanges that are caught up in the FTX debacle. So even having just, some sort of security that's an Australian exchange is not going to protect you from those bad actors out there, because there is a saying in crypto, not your keys, not your coin. So whenever you're going on exchange, you don't have the direct custody. You're actually giving up your cryptocurrency to a third party. So certainly Australia is probably a better environment, but you still want to do due diligence.
Yep. So speaking of that, three letters, F and T and X, that we've recently seen the collapse of, and really, we don't know the full extent of what impact that will have, and in particular in the context of SMSFs. So statistically, we've seen a fairly significant jump. I know you're at the SMSF Advisor Technical Strategy Days recently, and there'd been quite an enormous jump in the number of assets that were sitting inside crypto. Can you remember those? I'm trying to remember off the top of my head.
It was doubling each year. So it started around sort of 1% when they started reporting it in the 2009 year, and then jumped up to 2%. And then the most recent reporting was around about 4% of SMSFs have some exposure to cryptocurrency. It was sort of showing a doubling. That was sort of the latest ATO numbers that came out around about June, around about 4%. And that agreed with certainly what some of the software providers have been tracking. The actual dollar value certainly would have increased a lot, but, those that had exposure, it's around about 4%.
Okay, so I guess to my point there, why I wanted to give this question some context in numbers is, with a growing number of SMSF investors that were looking to cryptocurrencies, in the event that they've actually lost certain assets or potentially where assets are frozen, what then become the implications for the fund?
Yeah, it's certainly an interesting question, Aaron. At the moment, it looks like the ATO has given some guidance, limited guidance on their community pages. They're certainly not forthcoming in providing really detailed reporting, but a Board of Tax review is coming. But I guess you've got to look at sort of the CGT laws that sort of, crypto is a CGT asset. They're sort of giving guidance, and it looks like a C2 event, which is effectively, you can, as long as there's no chance of reclaiming that asset, that it is really lost, then, you can claim it as a capital loss. So you could write off those as capital losses. There was some discussion that it's not a G3 event, which sort of applies to shares only. The ATO it's only community forum, so don't take this as gospel. It's just someone on the ATO community forum saying, well, look, the G3 event, which relates to liquidations of shares, generally you've got to wait for the liquidation notice. As you'd be aware, Quarter Mentha is currently doing the cover-up of or the receivership of the Australian arm, but then there's another US firm doing the liquidation of that FTX International. So it depends on which one you have, but it really comes back to whether you've got a chance of recovery. It looks like to be the case at the moment. Hopefully we'll see a bit more guidance. I don't know, Aaron, you being a tax expert, would you have any more on that?
No, I think the only other important point that is going to be if it is generally crystallised and therefore there is a CGT event, or whether there is anything that just needs to be given guidance to around the market valuation requirement. So what do we need to determine it as a market value if there's actually not a value to maybe attach it to at this point in time? So I guess there's a couple of things that might need to be considered around whether you actually still own them or not, or whether they're gone, or whether actually you do own them, and therefore is there any issues around determining what the realisable value of that asset might be at this point in time.
Yeah, it's certainly challenging for those that have been tied up. It's about 30,000 Australians. I don't know how many of those would be SMSFs, but it is quite a large number. When you look across the crypto industry, there's close to over, 1.2 million with some sort of tax impact. So yep. It's certainly an issue. The other issue we're facing at Crypto Tax Calculator, which basically records these transactions and keeps records, which you've got to keep for SMSFs as well as for individual tax records, is you can't actually download any data or interact with the FTX exchange. So if you're, currently in the middle of a financial year, you may not have downloaded those transactions yet, being November, and you want to record those or have accurate records of those up until 30th of June 2023. The site's blocked. I just checked it this morning, and, we actually sent out a message from Crypto Tax Calculator while it was going on, to download any records. But that's also one of the risks you've got to be careful of. You got to keep accurate records, and trying to recreate those records if you've done a lot of transaction volume would be certainly an issue. You could possibly go back through your emails if you'd been notified on any trades through emails. It's going to be certainly a nightmare for those that have been caught up in it.
Does that mean if you hold those kind of assets, it might be a good idea to download this kind of stuff on a regular basis? I mean, obviously it would depend what exchange you're with and how they handle something like this. Yes,
it's certainly, again, I won't mention names, but it is good practice to hook into the APIs and choose. I'm a bit on the tech side, so I look at exchanges that have got robust APIs. APIs, I'm getting a bit nerdy here, but their program interface, which allows you to basically interact directly with that website securely. And then you've also got, I guess, the more common method, which is downloading a text file, a CSV file. So, yeah, it's certainly good practice probably to connect the APIs and regularly download. And then probably secondary, if the exchange doesn't have that, is to get the CSV and try to download it fairly regularly.
Or you end up in the once a year, and then the one time that you go to do it, you can't get it.
That's right. Or, there's some exchanges out there. I'm giving them a terrible name, but I want to, inform people that you just do your due diligence. There's some that have lost records in the past. 3 months of records. We've seen a crypto tax calculator just vanished off their books. So even if you download it regularly, they didn't back them up. So be cautious of that, I guess, is the message. Do your due diligence. Stick with the big exchanges. And certainly do a lot of research.
As you mentioned before, we've seen a big increase in SMSFs investing in crypto. Are they tending to stick to fairly straightforward things, or are you seeing them sort of venture into other kind of strategies or things that involve staking, for example? Are you seeing anything kind of happen with that?
Yeah, look, we're certainly seeing a bit of that at Crypto Tax Calculator. Certainly the average taxpayer, and this is not just on SMSF, this is across the Australian scope of taxpayers, but the average person has 8 wallets or exchanges. So it's quite significant. Think of that in terms of 8 bank accounts. So there is quite a bit of exploration. Staking is quite, I guess, getting more common, and it's becoming, you used to have to stake quite complex. You have to set up a whole, sort of IT infrastructure to be a bit of a boffin to actually do staking and set up basically a computer to do that. It's become a lot more streamlined of late, where even you can stake. It's sort of whether it is staking, I think, is something the ATO has got to work out what actually means staking. Staking can effectively just mean an income stream that you're validating on the blockchain. So you're actually contributing to the security of the blockchain. That's where the word staking came from originally, but it's sort of been extended into finance areas, and you can go onto an exchange now and they'll sort of call it staking. It's sort of like an interest-bearing account. Luna was a terrible example. Those that got caught up in Terra Luna was sort of paying an income stream. It wasn't quite called staking, it was called savings. But yeah, you've got to watch out for those. The other point I'd sort of raise with the staking is it's generally considered income. The ATO looks at it as an income element. Hopefully we'll get a bit more guidance as I raised. But the challenge with that, if you laid down some Ethereum and staked it when Ethereum was $5,000 and it was paying a staking reward, let's say, of $100 a day, that was its value at the time you staked it, and it was paying that. You have to record it when it hits your wallet. So, it's derived income as the point where you receive it into your wallet. If that has now dropped and you haven't sold any of it and it's dropped 90%, you're going to have a bit of a cash flow issue, because you've held on to that asset, assuming it's not a stable coin that sort of retains its value. But if it's something like Ethereum or one of the smaller coins, that could have significantly dropped in value, and you're left holding that. And if you want to pay your tax bill, you might have to realize that asset at a significant loss, because, it's when you sell that asset, it's a crypto asset, and you'll have to pay CGT, or you record a loss, but you'll still have to pay the tax on the income that you've derived from that staking. So it's a major cash flow issue, especially something you want to consider probably in your investment strategy, Aaron.
Absolutely. And I guess on the topic of investment strategy and so forth, are there any other, I guess, emerging topics, issues? There's been a lot of questions. I know Miranda's certainly spoken about it in a bit of detail through SMSF Advisor with things like NFTs. So, are there any of these types of emerging issues that you're seeing that are impacting the SMSF sector?
Yeah, NFTs are certainly an interesting derivative of blockchain. It's effectively a unique type token rather than a currency that's not unique. I know, look, there was some discussion around whether they're collectibles, if they did fall in, the definition of collectible. I think, Aaron, you'd probably be better to comment on that. I think it's probably a bit of a stretch, but
I mean, some of the bigger issues I think we've centered around even sole purpose as well. So, I mean, I'm still a little bit NFI on NFTs. So,
but that's right.
Yeah, I mean, these are issues that are being presented. I mean, I think I mentioned at the SMSF Advisor Technical Strategy Days that we were talking about topics there at that event, and I think Tim Miller did a top session on this, that these were not things that were even really falling into these type of events 5 years ago. Yet here we are today talking about the growth of this area that's kind of had been compounding year on year in terms of investment in. And then, we're even kind of beyond just the Bitcoin stuff to now looking at different variations of all this as well. And then all the collapses and stuff that sort of underpin all that as well. So it's certainly an area that's making plenty of news. So understanding all these issues within the SMSF landscape does become critically important.
Oh, look, that's 100% correct. The NFT, they grow so quickly. It was really only this time last year that they started to become a real trend. And this is certainly the challenge for the regulators and even for us software providers to keep pace with the pace of crypto. It just moves so fast and goes in different directions. And NFTs, they're again, I think I saw a stat about 98% are pretty much worthless. So, you'd certainly want to be considering your investment strategy, investing in these things. They're really new in the space. They really haven't had Bitcoin's been at least around for 14 years now, where NFTs, look, some of, there were some very early ones, but the more popular ones of late with the Bored Apes and other type NFTs, I think you've really got to look at, the sole purpose test. There's been a lot of complexity is if you hold some of these NFTs, you actually get airdrops. So if you're holding a Bored Ape, you would have got dropped ape coin. It sounds hilarious when I say it out loud.
But it's funny, I kind of go back to 3 or 4 years ago, we saw the Council of Financial Regulators look at these recommendations around is borrowing in super good and whatever. And then obviously they targeted on a diversification perspective with investment strategy, this issue of diversification. You kind of wonder, we are seeing certain SMSFs kind of go all in on this, and you wonder whether and to what extent, those funds now have been impacted by obviously the shift in decline in value that's occurred, but also how they can adequately determine that this is the right way for the management of their retirement. Now, it doesn't kind of fall into the scope of that Council of Financial Regulators because that was looking at leveraging super, but the same principles sort of apply here, where you go, well, subject to the level of asset exposure people are doing into this space, are you kind of dipping your toe in with a few $1,000s maybe on the proviso that you're hoping that it might grow, or are people being all in? And I guess you're getting some fair differences of opinion in that, and therefore the risk that puts on the retirement system, because people that may have thought that they can turn $100,000 into $1 million and they're flush for retirement probably are now currently sitting at $30,000 or $40,000 and now going to be probably sticking their hand out to the government for an age pension instead. So it'll be interesting to see the next couple of years what might transpire with this, because self-managed super funds are obviously there to give some choice, but there's a whole heap of risks that obviously sit inside that as well, to what level of risk are people prepared to take. And it goes back to things like the use of derivatives and all those sorts of things that, the higher the risk, obviously it magnifies the returns, but do you get into a position whereby there needs to be some regulatory, what's the word I'm after, some sort of regulatory imposition that comes in that kind of goes, do we need to kind of cut the cloth a slightly different way here to make sure that people are going in for the right reasons? And it goes right back. I remember when there used to be a 40% limitation on business for a property in SMSFs, and you probably recall that yourself.
That's right. Yeah.
But, there's these sorts of things that might sit in there. But the industry, as much as the regulators, probably trying to learn a lot at the moment to be able to form an opinion.
Oh, 100%. Yeah, it's certainly outside, the advisor regime. They're not really, not many of them. In fact, nearly all of them aren't set up to advise around cryptocurrency or NFTs. And I think, look, ASIC is saying that they are going to show a bit more regulation coming up in the next 6 months. Certainly the ATO's got the Board of Tax Review, so it could, be good to see some clearer definitions because, at the moment NFTs are defined as a cryptocurrency. As long as your trust deed allows or doesn't specifically exclude, it is a possibility. But I think a lot of people, as you say, go in feet first without looking at the practical implications, storing those NFTs or having personal, benefit from those NFTs. If you're getting an airdrop, and that airdrop's going to a different wallet to your super fund, that raises a whole heap of issues. The valuations, what you hear in the crypto industry is some providers of NFTs have actually created their own form of liquidity, trading against themselves. What sort of problems that presents to an auditor trying to value an NFT. I know some auditors will tell, how do you value air, Matt? But I think, these are serious considerations. We joke, but if you're sitting there, as you said, Aaron, that you can't be flippant if this is, the younger generation's idea of retirement, to retire on a bag of NFTs. And I think, we've got to put adequate resources around recording these and making sure, I guess, that they do have an adequate retirement and most importantly are well educated and well informed on some of the aspects of SMSF and valuations and audit.
Well, thank you so much for joining us today. It was very insightful and definitely gave us a lot of useful information there on managing everything with crypto and SMSF. So thank you again.
Thanks, Miranda. And certainly check out Crypto Tax Calculator to make this a little bit easier to manage all your different crypto accounts.
And the one thing I like, Matt, is the concept of hot and cold wallets. So I hope that you move from a cold wallet to a hot wallet the next time I catch up with you to buy beer.
Cheers.
But thanks once again. So Miranda, that was a great session with Matt there. Get some fantastic understanding, I guess, of crypto, but also the tax impact. So what was the key takeaway for you from today's session?
I think just highlighted how many little considerations there are with the record keeping, making sure it's in line with all the requirements for the fund. And it's just important to do your research, really. Yeah,
and I think that's right. For me, it's kind of, there are so many things that you've got to lay over the top of the investment, which you do with all things, but because it is a new area for self-managed super funds, all of the investment restrictions, all of the requirements for sole purpose investment strategy all need to be overlaid and tested in the same way. So therefore, the nuances of, the blockchain and cryptocurrencies and NFTs and stuff are all kind of being stress tested against these legislative requirements and also the income tax requirements. And we're only starting to see the impact of some of these things. And then they get amplified, of course, through, the FTX issues that we've seen in the past few weeks as well. So, due diligence becomes critical and making sure that the trustee and or those that are working with them are totally across what the requirements are going to be on the fund investing in those types of assets. Yes. I think it sort of showed the importance of researching where you're going to keep it as well. As you mentioned, the FTX collapse, it is worth looking into what exchange or perhaps what other method you're going to store it in. Yeah. So as is always the way, if anyone's got any suggestions around topics or speakers, how can they get in contact with us? They can get in touch at editor@smsfadvisoronline.com.au. Excellent. Well, next podcast is our 50th show, Miranda. So yes. We are looking forward to sharing with you what will be a summary of the 2022 year. I can't believe I'm saying that already as well. So thank you once again for joining us for this edition of the SMSF Advisor Show. And we look forward to you joining us for our 50th episode next time. Take care and bye for now.
Imagine being rushed to a hospital. Yep. And your life changing in an instant.
Imagine going through hundreds of tests and 46 weeks of chemo. Now imagine you're a child. That's why Starlight exists, to bring happiness to seriously ill children. Please donate at starlight.org.au.